All right, let's talk about the next big tech IPO on the horizon, NAVN. The travel tech company just filed to go public, so you know what that means. We're going to tear down their S-1 filing and give you the essential briefing. We're talking opportunities, risks, the whole 9 yards.
So, here's the game plan. First, we'll cover the pitch. What's their big idea? Then, we'll look at how they actually make money. After that, we'll do a full financial health check, lay out the bull and bear cases, and wrap it all up with the key takeaways you'll want to know.
Okay, let's kick things off with the pitch. I mean, the corporate travel space is, well, it's pretty crowded, right? So what makes NAVN think they can come in and shake things up?
At its heart, NAVN is all about something called travel and expense management, or T&E for short. And look, if you've ever had to travel for work, you know the absolute pain this can be. We're talking clunky booking websites, stuffing receipts in your wallet, and then the dreaded expense report. It's a system that feels like it hasn't been updated since the 90s.
So Navan's big idea is basically to take that whole old way of doing things and just toss it out the window. They've built this slick, all-in-one, AI-powered platform. It combines your travel booking, your corporate card, and your expense reports. The whole shebang. So for employees, it's way smoother. And for the company, well, for the first time, they get a real-time look at what's being spent, as it happens.
Okay, it's a really compelling vision, for sure. But how does that actually turn into a business? Let's follow the money and see how NAVN actually generates revenue.
And this is really interesting. Their business model is almost entirely usage-based. I mean, look at that. A full 90% of their revenue is from fees on transactions. Only 10% is from software subscriptions. And you got to remember this because it's a really critical point.
So what does that actually mean? It means NAVN's success is directly hitched to the amount of traveling and spending its customers do. Every time someone books a flight, stays in a hotel, or even just swipes a NAVN corporate card, NAVN gets a little piece of the action. That tiny subscription slice, that's just for the software. The real engine, the thing that makes this company go, is the volume of transactions.
All right, so the model's pretty straightforward. But for any investor, the story is always told by the numbers. So let's pop the hood and do a little financial health check, shall we?
And right off the bat, the top-line revenue is pretty impressive. We're talking almost $537 million last year. That's a 33% jump from the year before. I mean, that is some serious growth, and it tells you that people are really starting to use this platform.
But, and this is a big but, that kind of growth costs a lot of money. The company is still way in the red. They lost $181 million last year. Now, to be fair, that's a huge improvement from the year before when they lost over $330 million. Still, the takeaway is crystal clear. They are burning through cash to get this growth.
And if you look at this table, it tells the classic story of a modern tech IPO, doesn't it? You've got revenue and gross profit just shooting for the moon, but then you look down and see these massive operating and net losses. This is the growth at all costs playbook, right here in black and white. And the billion-dollar question for any investor is, can they ever flip the switch and make this thing profitable?
So, with that financial picture fresh in our minds, why would anyone want to jump into this IPO? What's the optimistic view? Let's build out the bull case.
Okay, the core of the bull case really comes down to this idea they call the flywheel effect. And it's a pretty powerful concept. It goes like this. A better, easier product brings in more users. More users on the platform means NAVN has more clout to negotiate better deals with airlines and hotels. Better deals make the product even more attractive, which brings in even more users. And you can see how the wheel just starts spinning faster and faster on its own.
And there are a few key things really pouring gas on this flywheel. First, their AI, which they call AVA. This isn't just some marketing gimmick. It's legit handling about half of all their customer service interactions. That's a huge efficiency gain. Then, you've got this massive cross-selling opportunity. Most of their 10,000-plus customers are only using a fraction of what NAVN offers. That's a huge runway for growth. And finally, they're already a global player, with 41% of their revenue coming from outside the US. They're tapping into a giant, fragmented market that's just begging for a solution like this.
All right, but a smart investor always looks at both sides. So let's flip the coin and talk about the bear case. What are the big red flags here? What could seriously trip this company up?
Well, the biggest risk is the one we keep coming back to. Can they actually make money? There's just no guarantee they'll ever get to profitability. And remember, their revenue is tied to business travel, so another pandemic, a big recession, that could hit them really, really hard.
Plus, they're not alone in this space. They're fighting against old-school giants and a bunch of other hungry tech startups. But on top of all that, there's a big governance issue that every potential investor absolutely needs to understand.
And this right here is a huge one. It's called a dual-class stock structure. Let me break it down for you. If you buy into the IPO, you'll get Class A stock, which comes with 1 vote per share. Simple enough. But the founders, they hold Class B stock, and each of their shares gets 30 votes. Do the math. This means that even after they go public and sell off a ton of stock, the founders will keep ironclad control over the company. Public shareholders will have practically zero say in how things are run.
Okay, we've looked at the good, we've looked at the bad. So where does that leave us? Let's boil it all down to the key takeaways for anyone thinking about investing.
When you really get down to it, an investment in NAVN is a pretty clear trade-off. On one hand, you're betting on a super high-growth company that's using slick AI to disrupt a massive, old-fashioned industry. On the other hand, to make that bet, you have to be okay with some pretty serious risks. A very uncertain path to ever making a profit, a ton of competition, and a governance structure where, frankly, your vote doesn't really matter.
And that brings us to the big question you have to ask yourself. Is Navan's AI-driven platform the future, a true market leader in the making? Or is this just another high-risk, high-burn tech company betting it all on growth that might never actually turn a profit? That's the question.